Hello friends, today is my 34th presentation for the team of Finance and Accounts, and the subject is identifying aspects that can adversely impact the financial reporting of fixed assets in the balance sheet. In today's presentation, it is part 1, which includes land, building, plant and machinery only. Overall, this is my 65th presentation considering all the YouTube presentations, and 85 causes have been identified. Now, what I plan to include in this are the overview of the three types of fixed assets in terms of tabulation of the causes that impact inaccuracy, caused by inaccuracy or caused by ethics related causes. Then detailed presentation of the causes vis-a-vis type 1, which is land, type 2, which is building, and type 3, plant and machinery. The remaining three types of fixed assets, namely F&F, furniture and fixtures, vehicles and office equipment, will be taken up in my subsequent next presentation. This is an overview of the operational causes and ethical causes. In the small table, in the first row indicates land, there are 14 operational causes and 17 ethical causes. Buildings, similarly 14 operational causes and 15 ethical causes. Plant and machinery, 12 operational causes, 13 ethical causes, with totaling to 40 operational causes and 45 ethical causes. Now this analysis is based on my detailed analysis of the aspects such as purchasing of these assets, acquisition of these assets, classification of these assets, revaluation of these assets, leasing aspects, sale aspects, and depreciation aspects vis-a-vis all kinds of these three types of assets. Now, first one is land related operational causes. Now, in the land purchases, in case of inaccuracy of the expenses such as land parcel costs, land survey charges, land parcel values, land consolidation charges, legal consultation fees, legal documentation fees such as agreement restriction, stamp duty for conveyance deed, brokerage expenses, taxes are not taken appropriately, it can lead to incorrect financial reporting. Similarly, insufficient documentation or support for the land purchase transactions, sale agreement, conveyance deed, legal title verification report, non-compliance report, etc., and the payment details, in case these are not appropriately available with carrying details, this can make the audit trail difficult and therefore recording in the financial books inaccurately. Similarly, for land acquisition, inadequate provision for the contingent liability associated with the land assets such as environmental cleanup costs or legal dispute, these need to be properly accounted for. Similarly, inadequate provisions for contingent liabilities associated with the acquisition of the land for consolidation purpose, such as land parcels of small unwilling landowners, land parcels having ownership disputes, or land parcels having illegal occupants that need to be removed. So the cost of these need to be properly accounted. Then non-timely accounting in the financial books. Land reclassification. Non-reporting or non-timely reporting of the reclassification changes such as changes of use, land use change from agricultural, residential or commercial or vice versa, or for the development work to operational uses or vice versa, which can affect the presentation and the accounting treatment in the financial books. Land revaluation. Incorrect or biased valuation method. This is point number 7. And land on lease, which land may be either taken on lease or given on lease. So inaccurate capturing of the lease income in case land is given on lease, and land expenses in case land is taken on lease. Then inadequate documentation for the lease agreement and terms, which can again make the audit trail difficult and therefore inaccuracies in reporting the various aspects related to the lands on lease or taken on lease. Land held for development. Point number 10. Incorrect classification on the future usage, that is whether the land will be used for development work, related to the landscaping or additional infrastructure or resale or operational use. Land improvements, incorrect allocation of the cost or expenditure for the land improvements done. Land sale, incorrect computation of the gain or loss on sale of land. Then inadequate or non-timely and land documentation of land sales. Now coming to the ethical aspect related to the land, as I was sharing that into 6-7 categories I have covered these ethical causes also, like land purchases, underreporting or overstating of the land value, misclassifying land use for development work or project work or operations, etc. Then land acquisition, incorrect allocation of the costs or inaccurate reporting of the expenditures like brokerage, legal expenses, stamp duties. Land reclassification, transparently in disclosing changes in classifications, and land revaluation, not transparently disclosing changes in the land assets values, and incorrect reporting of the revaluation, surplus or deficit. And land on lease, land inadequate disclosure on or hiding of the unfavorable lease obligations or lease terms vis-a-vis land given on lease or land taken on lease, and no transparency in disclosing changes in the lease arrangements, and not disclosing related party lease transactions, or manipulating the lease terms, or incorrect reporting of the lease expenses incurred. Land improvements, inaccurate reporting of the cost or in expenditures for improvements. And 30, last one, incorrect financial reporting for the land held for development. Last but not the least, for the sale of land, negotiating lower sale land prices not aligned to the market rates in return for kickbacks. Insufficient documentation or support for land sale transactions, for example, sale agreement payment details, which carry the important details. Statutory related aspects which are common, which are non-compliance with Schedule 6, that is not disclosing land details as mandated by the para 8.7.1.1 in the Schedule 6 of the Companies Act 1956 and general instruction related to the land, and not meeting requirements set out in the Accounting Standard 10. So with this I have just shared 14 operational causes related to the land which can reversely impact financial reporting, and 17 ethical causes. Now let me come back to the building related operational causes. Building can be either constructed or can be purchased. Now for the constructing the new buildings, inaccurate capturing of the all expenses such as fees of the architects, interior designers, MVP engineers, then cost towards the bought out materials by the company such as steel, cement, RMC, marble, tiles, etc., and so on, or contractor charges towards materials and labor construction variable costs. In fact, contractors at times can also include the scope of steel, cement, RMC, marbles, etc. in their scope. Purchasing or acquiring of the new buildings. Inaccurate capturing of all expenses such as building purchase price, legal consultation fees, legal documentation fees such as agreement registration, stamp duty, etc., which was similar in the case of the land. Insufficient documentation in support for the building purchase transactions. These are also similar to the what we talked about the land. Acquisition, non-timely accounting of the new buildings in the financial books. Improper classification of the buildings, the purpose of the building, that is residential or commercial or anything else. Revaluation, incorrect or biased valuation method not linked to the age of the building or condition of the building or the market rates. And the lease related inadequate documentation. Revaluation, incorrect or biased valuation method not aligned to the age and condition of the building and market prices. Building on lease, inaccurate capturing of the amounts, inadequate documentation, and depreciation, inaccurate or understating the depreciation expenses. Sale of the buildings, inaccurate capturing of the building disposal value, net of expenses associated for the sale, insufficient documentation or support for building sale transactions, inadequate or non-timely documentation for disposal, incorrect computation of the gain or loss on the sale of buildings, inadequate or non-timely land of the building documentation for building sale. Type 2, again, building related ethical causes. Purchases of the new buildings. Ethical causes. Again, under 6-7 heads. Purchasing, under-reporting or overstating building values, colluding amongst the buyer-seller, leading to kickbacks and resulting in paying unfair or higher prices of the buildings. Acquisition, under-reporting the acquisition value of the buildings. Classification, incorrect classification of the buildings as owner-occupied or leased for investment purposes, etc. Because these have other implications like even the property tax matters also. Then non-transparency in disclosing the charges in the building classification, overstating the value of the building through revaluation, and non-transparency in disclosing the changes in the building values. Now, ethical matters related to the building which can adversely affect the financial reporting in the balance sheet. Inadequate disclosure or hiding unfavorable lease applications in terms of or lease terms vis-a-vis either building taken on lease or given on lease. Non-transparency in disclosing the changes in the lease arrangements. Non-disclosing the related party lease transactions or manipulating these terms, and incorrect reporting of the lease expenses. Renovations, colluding with the contractors and obtaining kickbacks and adversely inflating the renovation expenses and thus adversely affecting the financial reporting. Insufficient documentation support for the building sale transaction. Inadequate or non-timely documentation for the sale. Operational causes causing financial reporting in the balance sheet related to the plant and machinery. Again, building the plant and machinery can be either new or the second hand, so I will take up each one of these separately. Purchase of new plant and machinery. The costs involved in purchase of the new plant and machinery include pre-discharge inspection charges, purchase prices of the equipment like import duty, custom duty, port charges, etc., essential spares, freight and marine insurance, equipment handling, installation, testing and commissioning expenses like covered under the SITC supply, installation, testing, commissioning, and the cost of training employees and essential spares and taxes. In the case of second-hand machinery, it is little more complex because it also includes extensive inspection at the vendor end to see the performance of the second-hand machinery before deciding to purchase, and the cost of reconditioning of the second-hand machinery with the new parts or spares, and cost of conducting trials before the purchase, and other costs as I mentioned, including the SITC. Insufficient documentation in support of the plant and machinery purchase transactions like capital item justification note, justification note, non-timely accounting in the financial books. Classification of the plant and machinery. Inaccurate classification of plant and machinery vis-a-vis cost centers such as R&D or aggregate manufacturing or machine shops, heat treatment, painting or end products, assembly, which are relevant in the case of manufacturing industry. And this classification of the plant and machinery would be governed by the as per the requirement of the industry. Repair and maintenance cost applicable in the case of plant and machinery. Inaccurate capturing of the cost of bought spares and in-house manufactured parts, cost of in-house manufactured parts in the tool room, or labor cost for dismantling and reassembling of the testing. Revelation of the plant and machinery. Incorrect or biased valuation methods not linked to the age, condition of the plant and machinery in terms of efficiency and quality, performance, plant and machinery availability in the market of the models, capacity required, and the market rate, etc. Continuing, operational causes. Plant and machinery either given on lease or taken on lease. Inaccurate capturing of the amounts related to the income or expenses. Inadequate documentation with respect to the lease agreement and terms, and depreciation of the plant and machinery, that is applying inaccurate depreciation rates or understating the depreciation expenses amongst different type of plant and machinery. Sale disposal of obsolete plant and machinery. Insufficient documentation or support for the plant and machinery sale transactions. Approve and for example approval note from the management for disposal or sale order or agreement for the plant and machinery, payment details, fixed assets registers, and required or non-timely documentation for the sale disposal. Ethical causes. Purchase related ethical causes, whether old or new, under-reporting or overstating the P&M value, colluding amongst the buyer sellers, leading to kickbacks and favorable to with favors to buyers and resulting in paying unfair higher prices for the plant and machinery. Classification of the plant and machinery, non-transparency in disclosing the changes, and repair and maintenance cost, colluding amongst buyer seller, leading to kickbacks and favors to the buyers, leading to paying unfair and higher prices for the repair and maintenance expenses. Revaluation of the plant and machinery, overstating or the value of the plant and machinery through evaluation, non-transparency in disclosing changes in the plant and machinery value, leasing, which I already shared, similar to the building and land, non-transparency in disclosing changes in the lease arrangements, not disclosing related party transactions with respect to the leasing of the plant and machinery or manipulating the lease terms, and incorrect reporting of these expenses. Depreciation of the plant and machinery, inconsistent depreciation rates on a year-to-year basis. Sale disposal of plant in return of kickbacks, negotiating lower sale price of plant and machinery not aligned to the depreciated value of the market rates, and insufficient and non-timely documentation support for plant and machinery sale transactions. So my building on the property ethics, my second book was released in the November 23, and this blog is primarily focusing on the tangible fixed assets, land, building, and plant and machinery. Please look for my forthcoming third book, which will dive deeper into the smart balance sheet strategies and aspects. You can also refer to some of the articles of your interest in my website or Facebook or LinkedIn. Thank you very much.